Here's the great man, Leith Van Onselen, Chief Economist at the MB Fund and MB Super. He joins Luke every Saturday for the Treasury of Common Sense. G'day, Leith. Have you had any possum problems lately?
Not down here, mate. Not in Melbourne. It's probably too cold. They've probably scampered into the bush.
Yes. Anyway, well answered. On Friday, Jimmy Chalmers approved the ANZ Bank's $4.9 billion takeover of Suncorp's banking arm. What are the issues with this?
Mate, this is one of the worst decisions I've seen in a long time. So just a quick overview of what happened. So late last year, the competition regulator, the ACCC, blocked ANZ Bank's proposed $4.9 billion takeover of Suncorp Bank, and it was blocked on anti-competitive grounds. And then in February this year, the ACCC's overseer, the Competition Appeals Tribunal, which is about 12 people, overturned the ACCC's decision to block the takeover. And then on Friday, our illustrious Treasurer Jim Chalmers gave final approval to the ANZ to take over Suncorp, which has made ANZ the third biggest bank in the nation. Now, there are a couple of fundamental problems with this bill. So first of all, it's going to reduce competition in what is already one of the most concentrated and oligopolistic banking markets in the world. And this is why the ACCC initially blocked the deal in August last year. And to the extent that it reduces competition, it has the likelihood of obviously making customers pay higher fees and higher interest rates because banks will have greater market power. And this comes at a time when corporate profiteering has been one of the things that's been blamed for driving Australia's inflation and cost of living crisis. And this is why the government launched a separate inquiry into Australia's oligopolistic supermarkets. So while it's doing that for supermarkets, it's then reducing competition in the banking sector, which is going to allow more corporate profiteering and price gouging. And one final thing to say on this is that the approval of this deal also comes about 5 years after the Hayne Banking Royal Commission, which slammed the big four banks for malfeasance. And yet Treasurer Chalmers has just given the big four banks even more market power. So on anti-competitive grounds alone, this is an absolute shocker. And it gets even worse because then it also undermines the authority of the ACCC.
Well, I'll get onto that in a tick. Before we do, though, just the point you made, Leith, about this profiteering, and it is disappointing. I'm not making a blanket accusation here, but let's just say that a sustained period of inflation does enable the corporates to hide their profiteering, doesn't it? It's an excuse. Like, oh, look, there are inflationary pressures, cost of this, that, the other, a whole range of things they can put up as a bulwark against criticism for basically gouging. Hard to police?
Yeah, it is hard to police, but I mean, the ACCC's tried to do it in a sort of matter of fact here. They've tried to stop greater concentration and more market power in the banking sector by blocking this takeover, and yet Jim Chalmers and the Australian Competition Appeals Tribunal overturned the ACCC and has effectively greenlit less competition in the banking sector, more market power, and more opportunities to price gouge us, which is just absolutely atrocious. And the thing about this bill is that the ACCC has a budget of about $30 million. It has hundreds of staff. It conducted a very thorough investigation of this takeover, I should say. And it concluded that it's likely to substantially lessen competition in the banking sector. And then we have the Competition Appeals Tribunal, which is about a dozen people appointed by the federal government. It's underfunded. It doesn't even have a secretariat. Then overruled the ACCC, which just seems absolutely ridiculous. And this has set a really bad precedent because what it's effectively done is by overruling the ACCC, it's basically given a green light to any firm in Australia with market power that wants to overtake someone else, that whenever the ACCC blocks them, they're just going to appeal it to the Australian Competition Appeals Tribunal and, basically try and overturn the ACCC's decision. So it really has eroded competition policy in this country, and it's eroded the authority of the ACCC. And I think we've witnessed a gross failure of competition policy and due process in Australia with the approval of this takeover. And I cannot believe that Treasurer Jim Chalmers has just rubber stamped it. It makes no sense.
It seems strange, doesn't it? And especially, is it fair to say, Leith, the ACCC, of all government agencies, has a very good reputation, does it not, with the general public? I mean, we rely on it a lot, and as far as I know, it has a terrific reputation.
Yeah, look, yeah, I mean, certainly as far as regulators go, it's fairly clean, I think. but its reputation has been tarnished by this. I mean, not through fault of their own, obviously. It's just that their overseer has decided to overrule them because it's basically drunk the ANZ's Kool-Aid arguments that this is in the public interest, which it absolutely is not in the public interest. I mean, this doesn't pass the pub test. Having less competition in the banking sector, making the big four banks even more powerful than they already are, when they're already the most powerful, banking cartel in the world, arguably, just makes no sense in my view. And this is why Bendigo and Adelaide Bank opposed the takeover as well, and on competition grounds. And I think the ACCC was right, and the Treasurer and the Competition Appeals Tribunal has just overruled the ACCC and completely destroyed the ACCC's authority in the process.
Well, and we do rely on these smaller banking institutions, particularly when it comes to not only inflation, but mortgage rates around this time. I know they're still relatively low compared to other periods. Once upon a time, I took out a loan paying 17%, but that's beside the point. That's a long time ago. But in a period of, we need this competition, don't we? And it certainly discourages that. You don't want to drive the smaller players out of business.
No, that's right. And what's going to happen, say, I'm just making this up, this isn't obviously on the agenda, but what happens if, say, Woolworths decides to try and take out IGA Group and the ACCC blocks it? Are they going to then try and appeal to the Competition Appeals Tribunal and try and get the decision overtaken? I mean, Australia has one of the most concentrated economies in the world. We have, oligopolistic market power firms across all industries. And decisions like this just make the situation even worse. We need more competition in Australia, not less. And the Treasurer has just greenlit less competition and more corporate power to drive up our costs and drive up cost of living and inflation. This fails the national interest. And I think the Treasurer has failed badly.
Now, we touched on the Wednesday monthly CPI inflation indicator with Dennis Shanahan from the political perspective, but from the economic perspective, Leith, how will it affect the possibility of rate hikes?
Yeah, look. Obviously, the figure wasn't great. So we had a 4%, year-on-year inflation reading for in the May CPI indicator. Now, it's important to note that the CPI indicator that comes out monthly isn't nearly as comprehensive as the quarterly result. That the quarterly inflation indicator, which is the one that the RBA looks at most closely, it only includes 2/3 of items roughly. And yes, it wasn't a good result. It was obviously higher than what economists were expecting, and it has increased the probability of rate cuts. However, it doesn't necessarily mean that interest rates are going to rise. There's been a lot of bleating in the media that rates are certainly going to rise because of this, etc. And I think the financial markets now give it a 66% chance. But it's important to note that the Reserve Bank's going to receive 2 retail sales prints, the June labour force figures, as well as the June quarter CPI inflation report, that's the comprehensive one, before making a decision on whether to raise rates at its early August meeting. And indeed, a speech delivered on Thursday night by RBA Deputy Governor Andrew Hauser actually played down the significance of Wednesday's CPI print. And he basically said that. He said, look, there's a lot more data to come in and we'll make a decision in 5 weeks' time. That said, the figures obviously aren't good. They have increased the prospect. And what the figures really show, Phil, is that the Albanese government has failed on a few areas, which is actually increasing the nation's inflation. So first and foremost, obviously, the Albanese government's record immigration program has put significant upward pressure on rents, and rents is actually one of the main drivers of inflation. And rents rose 7.4% in the 12 months to May. And actually, without the government subsidies, it would have risen by 9.3%, which is just insane. That is ridiculous rental growth. It's been driven by the high immigration into, obviously, a supply-constrained housing market. The other thing is, obviously, I talked about last week, all the failures in energy with gas, etc. Well, energy inflation, energy prices rose 6.5% in the 12 months to May, but without all the energy bill relief from state governments, etc., it would have been 14.5%. Now, both rents and energy are tracking well ahead of the Reserve Bank's 2 to 3% inflation target. And they're actually 2 of the key drivers of this sticky inflation that Australia has. And I put them down to federal government policy failure. And effectively, these policy failures are making the Reserve Bank's job much harder to contain inflation. And what we really need is for the federal government to step up and do its job and, run some energy reform and also significantly curb immigration to help the RBA out, because the RBA only has one tool to manage inflation, and that's interest rates, and they only really impact 1/3 of Australians with mortgages. And, it's a very blunt tool, and I think whereas the federal government has a whole bunch of measures that it can pull to help the RBA out, and it's got to really step up and help the Reserve Bank out through its policy.
I was listening to Andrew Hauser during the week, and look, this is a minor point compared to the very important numbers you've been talking about, mate, but he seems to be I'm not quite sure how to put it. I think informal's putting it too far, but put it this way, he seems to be quite a good communicator. How important is that for the head or deputy head of the Reserve Bank to be able to speak our language when it comes to explaining their decisions?
Oh, I think it's incredibly important. And yeah, he does seem to be a straight talker, which is what I like. So sometimes the RBA, deputies and governors, etc., they sort of sound like politicians. And I think it's good that he does, talk in a direct way. And look, he's actually, I think he's from the UK. So
Yeah.
He's been imported he's basically a deputy governor that we've imported from overseas, obviously, because he's got good experience, etc. And I think he's, from the sounds of it, I've only heard a few speeches by him, but he does sound like he was, he was certainly the right person for the job.
And look, I don't want to belabor the point, but you did bring it up last week and touched on it just then, is that there seems to be an easier way out for the government in terms of the inflationary pressure on energy prices. And I guess, for those who might have missed your discussion last week, Leith, there is a way out of this through gas, and the government seems obviously, and I think we can guess the political reasons why, very reluctant to go down that route. Is there any chance that may happen? Will there be just so much pressure economically on the government to look more closely at gas and free that supply up?
Yeah, look, absolutely. They really need to do it because, just a quick recap. So Australia's East Coast are paying some of the highest gas prices in the world, despite the fact that we export more than 2/3 of it. And the reason for that is because the East Coast of Australia is the only gas exporting jurisdiction in the world that doesn't have a domestic reservation policy in. And the federal government really needs to implement a domestic reservation policy ASAP to ensure that the gas supplies are secured domestically before we export them. And that would give us low prices and obviously guarantee our gas supply. And the reason why that's so important is not just through gas, but also gas sets the electricity price. So if you have expensive gas, you then have expensive electricity. And the way it's going now is obviously, we have these super high energy prices going into a household power bills, also going to a business power bills. They're driving inflation across the economy. And more importantly, they're sending our manufacturing sector broke. And they're forcing the closure of a wide range of manufacturing firms. If they don't fix this situation, Australia's going to be left with basically zero manufacturing capacity, and the only manufacturers that are going to survive are going to be those which are reliant on government subsidy. So the federal government needs to pull its finger out and fix the energy market as soon as possible, and stop Australians on the East Coast paying 5 times the prices that Americans pay for their gas, even though Americans are the biggest exporters in the world. So that's the 2-minute summary.
But once again, cutting through, mate. Words of wisdom, and we really appreciate it. We'll do it again next week if you don't mind.
Yeah, cheers, Bill. Speak to you next week.
Good on you, mate. Thank you very much. Leith Van Onselen, Chief Economist at the MB Fund and MB Super. And as Luke calls it, this segment, the Treasury of Common Sense. I'll get back to the text line.